Weekends at 10 on Cnbc.
So Wednesday morning, you're back with us on Squawk Box and taking a look at doing a quick price check on oil for you. April's front month NYMEX is coming back a bit, up 15 cents coming to mid-morning Asia, 99.67 overnight. Though we had a sharp fall, down $3 or about 3%. That dragged gold down with it as well. The precious metal off 2% there. As far as oil is concerned, though, prices went soggy on expectations that the weekly inventory numbers out are going to show a build in crude for the 9th week in a row, in gasoline for the 17th week in a row, as refineries build up their inventories ahead of the peak summer driving season in the U.S. Also, we've got OPEC meeting in Vienna later tonight. The cartel is expected to rebuff calls to increase output. Jonathan Kornfeld is Asia Director at Hudson Capital Energy. He joins us right here on set now. Jonathan, good morning. Great to see you. Is that what you expect to happen in Vienna tonight?
Absolutely. I think it's a very interesting situation what's going on right now with OPEC. You have the West, represented by the U.S., calling for production increases. Then you have the hawks. You have Algeria, Venezuela, and Iran saying we need to decrease production. And in the middle, you have Saudi Arabia, which is very interesting. For the last month or so, they've been pumping about 300,000 barrels per day more than their original agreement. So they could quite easily scale it back over the course of the next couple of weeks. Yeah. And unfortunately, I think the hawks actually do have a bit of a point in that we're coming to the end of heating oil season in the U.S. Summer driving season is still a bit of a way off. And you also have the continuing economic problems in the U.S., which might spread to the world. And the hawks are really worried about demand. And I think they have a point, but OPEC cannot be seen to cut production when crude oil is at $100. It just would be politically unviable to do that.
Almost suicidal. In the last half an hour or so, we have heard some comments from the Saudi Arabian Oil Minister Ali Al-Naimi, published in Al Hayat, saying that, well, signaling rather, that there's no need to change production. Saudi is the most influential member of OPEC. They're the group's de facto leader. So would you expect the other members to pretty much fall into line now after these comments?
They never want to hear that they're falling into line with Saudi Arabia, but I think Saudi Arabia is the de facto leader. However, they do take everyone else's opinion into account, and it's really the best thing to do right now is really to do nothing. Maybe issue a couple hawkish statements, let everyone's opinions get aired, but they're really not going to do anything, and that's really what's going to happen.
I got to ask you, I mean, Saudi Arabia, of course, the historical swing producer. Ali Al-Naimi also came out with comments saying that, look, a lot of the big run-up in prices we've seen for oil, also for gold recently, has to do with the spec money. We were talking to a guest earlier on, a couple of minutes ago, who was saying that, look, the specs have had a good run, they've made their money, they're likely to want to take their money off the table now, take some profit, especially with a sense that the demand side, in terms of fundamentals, that's going to start eroding. Do you see that happening?
I think the investment capital that has caused us maybe the last $10 rally, that there was a little bit of profit taking last night, which is why we came off $3. However, the reasons we've reached $100 have not gone away, and $90 have really not gone away. If you look at what's happened in the last couple months, the backdated crude contracts, they've also rallied too. And that really points to the fact that it's not just a weak dollar, it's not just speculative inflows. It's more of a fact that over the course really of the last 30 years, there's been a staggering lack of investment in productive capacity, and that's really caught up to us now. Currently, we use 1 barrel of oil for every. We use 1 barrel of oil for every. We use 8 barrels of oil for every one that we discover. Yeah. That's what it is, and things like that really have caught up to us, and there's really no way out of it. So that's why people say it's the weak dollar that's gotten us up here, and inflation that's gotten us up here. That's not really it. It's the fundamentals that got us up above $80, $90, and it's really a lot of inflows that really just caused the volatility in the market to skip around.
Okay, it's good to know. John, we've got to go. Just out of time. Great to talk to you, sir. Thanks for dropping by.
Yeah, it was a pleasure.
All right. We've been speaking with Jonathan Kornfeld, Asia Director at Hudson Capital Energy, here on set with us. All right, next up on Squawk Box, we're counting down to the Hong Kong Open now. 12 minutes away. We'll help you get set up for trade right here on CNBC. First in business worldwide. We'll be right back.